Hi, I'm Holly and you're watching 𝐃𝐞 TV live from Sydney. This is the Stocks in Action. We'll be looking at a few recent updates from ASX listed companies along with a quick glance at developments across equity and commodity markets. So let's go to the stocks that are under the spotlight today. Shares of ASX listed medtech company MedAdvisor were trading up today after it announced its new 5-year agreement with pharmacy wholesaler Australian Pharmaceutical Industries. MedAdvisor owns Priceline Pharmacy, Soul Pattinson Chemist, and Pharmacist Advice banner groups representing approximately 450 pharmacies. The agreement is expected to add over 250 new Pricelines to the MedAdvisor network, a rise of nearly 7%. MedAdvisor will also create a branded app for Priceline that will be developed as part of the Total Brand Digital program to enable the API pharmacy network to better support its customers through innovative technology. According to the announcement, MedAdvisor will get a monthly recurring license fee from each participating API pharmacy. They'll also generate additional revenue from transactions, messaging, and health program fees. Australian Pharmaceutical Industries will be converting the MedAdvisor service from September 2021, with the first revenues expected in the second quarter of the financial year 22. And next in the news is one financial services company who's in hot water, AMP. Today, the Australian and Securities Investments Commission, or ASIC, initiated civil penalty proceedings in the federal court against 6 companies of the AMP group. ASIC have claimed that these entities charged fees for no service on corporate superannuation accounts. AMP was trading down after the news, and ASIC claims that these AMP companies have charged advice fees to more than 1,500 customers, despite being notified that those customers were no longer able to access the relevant advice. ASIC alleges AMP received over $600,000 in advice fees from affected customer accounts. AMP Superannuation is the trustee of 2 superannuation funds, the AMP Super Savings Trust and the AMP Retirement Trust. The company has acknowledged the commencement of the civil proceedings and shared via an ASX announcement that AMP has taken action to rectify the issue and has started a remediation process. The remediation was completed on July 2019, with approximately 2,500 customers being remediated, a total sum of around $900,000, covering fees charged and lost earnings. Also making headlines is SZL, the installment payment platform. Shares of the company were trading down today after it reported a 118.7% rise in merchant sales in the June quarter. It also reported underlying merchant sales for the second quarter of 2021, which rose 118.7% year on year. SZL's income rose 122.6%, and as a percentage of underlying merchant sales, SZL's income in the second quarter of this year remained relatively flat at 5.9%. Active consumers rose to 2.9 million, showing a staggering 95.5% increase. That's an addition of over 250,000 active consumers during the quarter. Not to mention, on June the 3rd, SZL shared it had struck a 3-year deal with Target, and as of the 30th, the company had a total cash on hand of $61 million. Now it's time for a short break, but stay tuned because I'll be right back with more trending updates for the Australian market.
Property by 𝐃𝐞. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐿𝐴𝐼𝐴 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐿𝐴𝐼𝐴.
Welcome back. I'm your host Holly, live from 𝐊𝐴𝐼𝐴 studio, and you're watching the Stocks in Action. On to news now from National Australia Bank. And the share price of NAB was trading up after the company announced an on-market share buyback of $2.5 billion worth of ordinary shares today. The bank expects to start the buyback in mid to late August of this year. According to the announcement, NAB currently has an opportunity to reduce surplus capital. It wants to have a strong balance sheet that supports growth to improve shareholder returns. The bank recognises that on-market buyback is the most appropriate mechanism to achieve reduced share count and sustainable ROE benefits. They're continuing to operate well above APRA's strong benchmark of 10.5%, with a reported its Common Equity Tier 1 capital ratio of 12.37 at a level 2 as of the 31st of March. NAB intends to purchase shares on market to satisfy dividend reinvestment plan requirements over the buyback period. And the last news to touch on in this session covers the gas-focused energy company Origin Energy. Stocks of Origin were trading down today after it shared its quarterly performance for the period ending June 2021. In the integrated gas space for the financial year 21, sales were stable despite a 53% reduction in capital expenditure. The commodity revenue dipped 35% as oil prices released were lower. Origin Energy received cash distributions from Australia's largest natural gas producer, Australia Pacific LNG, of $709 million. However, in the June quarter, commodity revenue increased 19% from the March quarter because of higher realised oil prices and domestic volumes. In the energy markets, COVID-19 subdued business even against higher residential demand in the financial year 21. Electricity sales volumes were flat, while gas sales volumes decreased 11% due to expired business contracts and lower demand for gas-based energy. That being said, in the June quarter, electricity sales volumes rose 9% compared to March for Origin Energy. A business recovery was seen alongside cooler weather, as gas sales volumes decreased 12% in the previous corresponding period, caused by reasons similar to the yearly reduction. Now, before wrapping up, let's quickly glimpse through developments across equity and commodity markets. The S&P ASX 200 is lower today, dropping 0.19%. Origin Energy is down 7.85%, and Redbubble has taken a big loss too, of 4.93%. More sectors are trading lower rather than higher today, despite the gain in the S&P ASX 200 index. Materials is the best performing sector, while utilities is the worst performer. Alright then, that is just about all for now, but stay tuned with 𝐊𝐴𝐼𝐴 TV for more live market updates. We'll be back with more news on markets, economies and diverse themes and sectors. Holly Shields signing off.